Hi guys, hope you're well today. Now, maybe you're a new investor, or maybe you're an existing investor that already has a share dealing account. I wanted to make this video because if you are new, maybe you don't know what share dealing accounts are, or what stockbrokers are, and what accounts are available, and what the fees are, and what they do. And if you already have a share dealing account, well, maybe there's just something better out there that you haven't considered. And so that's what this video is all about. I want to just go through a few stockbrokers, as many as I can actually, and give you an idea of which one's the best one. I'm going to start off with the best one, so stay tuned for that at least, and I'll tell you why it is the best one. It's the one I use, of course, and then we'll go on to a few other stockbrokers if you want to continue watching the video, and you can see what other stockbrokers have available and what they can offer as well. So let's get started with the stockbroker I use. Well, first of all, what is a stockbroker? Well, you kind of imagine from films and from what kind of people say, and the sound of the words as well, you think a stockbroker is a person. So you would phone them up and you'd say, I want to buy X amount of shares in company Y. But actually, that's not really the case anymore. The way you buy and sell shares is you kind of do it through the internet. You can still call up, but it's often a bit more expensive to do so. So you have to open up an account online, and it's not dissimilar. So it's very similar to opening up something like a bank account. Occasionally you have to, give a few sort of details, like maybe you have to send your passport away potentially if they want to just check who you are. Or you just fill in an online form and you can get the account opened, take a photo of your ID potentially, send that off, and the account is usually opened pretty quickly within about half an hour. So it's very easy to open up a stockbroker, a sort of share dealing account, and treat it very much like a bank account. You can put money in, you can take money out, and in that account you can use it to make transactions. And those transactions that you're going to make, instead of in your day-to-day life, you're going to be paying Netflix, you're going to be paying for Google, or paying for whatever, paying for Google, don't know why I said that, paying for whatever you're paying for. But instead of that, in your share dealing account, you're going to be buying stocks or bonds or ETFs. And we'll go into a little bit more detail about what those are later on. So what is the share dealing account I use? Well, it's this one here, xo.co.uk. And I'll just say just now, in the interests of transparency, I don't get any money from them. They don't sponsor me, nothing like that. This is the company that I've used for 10 years, if not more. And they have been absolutely fantastic. It's kind of like a no frills, no fuss. In fact, they're so no frills and no fuss that you don't even find them on comparison websites. And that's why I really wanted to share this with you, because this is not something you would really find of your own accord. Now, I'll show you why it's great. It says here on the front of the web page, I mean, it's very basic. There's only a few different pages on the website. And it says here £5.95 flat rate per trade. And that's exactly what it is. And it has been ever since I opened it. There are no sort of additional fees or anything like that. You don't pay an annual fee, which is quite a biggie, because an annual fee, will take maybe 0.5% of your total holdings per year. It's just, if you don't do anything and you just open the account, then there are no fees. And if you buy a stock, then it's £5.95 to buy however many stocks you want. You could buy £500, you could buy £1,000, you could buy £1 million worth of stock, and it costs £5.95. So that's why I really like this, because if you do nothing, you don't have any fees. And so using this account, and I opened up an ISA, so XO do an ISA account and a normal share dealing account. And I would highly encourage you to open up the ISA, because it's tax-free going forward, and you can invest up to £20,000 a year. So it's a major advantage if your share dealing account builds up, if your ISA builds up and up and up, then you won't pay any tax on any of your gains, which is great. So what can you trade within the XO account? Well, you can pretty much buy whatever you want. You can buy stocks, you can buy bonds, you can buy ETF. So that's a biggie that lots of people will want to do. So an ETF is an exchange traded fund. So it follows a market. So you could buy the S&P 500. Now, lots of you will heard about Vanguard. They do very low cost tracker funds, ETFs, and they will follow the FTSE 100, the FTSE 250, the S&P 500, the NASDAQ, and you can buy those from here. You don't need to buy them from Vanguard. They are on the stock market, and this is a stockbroker, so you can buy them from here. Which means the only thing that exo.co.uk do not do is they don't do foreign stocks. So you cannot buy American stocks, you cannot buy Canadian stocks or South African or Australian. You can only buy UK stocks. And I quite like this as well because it really focuses your attention on what you know best. There's enough range. You know, there are thousands of stocks on the UK stock market. So if that's not enough and you're going to America, then you're probably getting out of your comfort zone, out of your circle of competence, and you should be sticking within what you know. If you live in the UK, which I do, and if you're watching this video and you live in the UK, then you should be investing in UK stocks first and foremost, and this is a great way to do that. So that's why I use these guys here. And also I wanted to show you, so they're on the stock market. They have a listing on the stock market. They're called Jarvis Investment Management. That's the name of the company. And if we just type this in here, their ticker or their symbol is JIM, J-I-M, and you can see they come up here. And if we go to the 5-year graph, you can see up and down, lots of investment sort of stockbroker companies went up during COVID because everybody was trading stocks, and then lots of investment companies have come back down. But here you'll be able to see that they make a profit every single year, and quite a healthy one at that, 5-6 million a year. So they're a good company, and even though their fees are the lowest out of any of the companies we're going to look at, they still manage to turn a profit without charging us too much. So I just think that's really, really cool. And in fact, I do think it's a very good investment, but of course you do your own research. I mean, it'd be quite nice to have a stockbroker that you buy shares with and also own part of that stockbroker as well. I think that's quite a nice idea. So what happens if you go into Google and you type in best share dealing account, right? Well, the first one that comes up is Hargreaves Lansdown. And they are one of the biggest in the UK, if not the biggest in the UK in terms of sort of share dealing, and they focus on very high net worth individuals. So I should say, guys, in the video that obviously I've told you what I think is the best one. So if you feel if you're a novice and you think, wow, that sounds absolutely amazing, then of course you don't have to watch any further. And if you obviously have a share dealing account already and you think, oh wow, that's much better than the one I own currently, then obviously EXO just comes highly recommended from me. It's very simple, but it really does the job. I mean, you just buy shares, sell shares. There's no incentive to do trading, and it's very easy to use. So I just couldn't recommend it anymore. But now, from this point on in the video, we're going to go and have a look at some of the others, some of the bigger players, and the stockbrokers that do appear in the sort of top stockbroker lists if you type that into Google. So let's have a look at Hargreaves Lansdown for starters. Now, because they're one of the biggest share dealing accounts, they're quite well known, and it means that they have got a lot more sort of power in how much they charge. So let's have a look. I've got Hargreaves Lansdown here, and you can see instantly that I've filtered onto the account charges section, because the things that are most important when you're looking for a share dealing account is, does it offer you the opportunity to buy what you want to buy? And secondly, what are the fees? Really focus on the fees. The fees are so important. And here you can see with an ISA account, so I'm going to really focus on ISA accounts here, because if you've got £20,000 to invest, you should be putting that into an ISA over and above a share dealing account, because you can have a tax-free amount or you can have a taxable amount, and you're always going to go for the tax-free amount if it's allowed, and the government allows that, and they do this for a reason so that you can use that. So we're going to focus on ISA accounts for now. If you've got more than £20,000, then of course the remainder will then spill over into a share dealing account, and then the year after you can then move that across into the ISA at £20,000 per year. So on Hargreaves Lansdown, you can see that there's an annual account charge on the ISA of 0.45%. So if you are investing sort of larger sums of money, that is quite a lot of money that you're then paying just to have the account open every single year. That's before trading fees, that's before stamp duty. So stamp duty is when you buy a stock on the stock market, you pay 0.5%, so half of 1% goes towards the government as a sort of a tax. So on top of trading fees, on top of stamp duty, and on top of this annual fee, that's quite a lot of fees that you're going to end up paying here. And so already, just for me, looking at this, I would already discount this as I don't want to have my money in here, because if I have my money in here and I'm not doing any trading, I'm not investing in anything, I'm just leaving my money in there like a bank account, I'm going to lose almost 0.5% every single year. That's going to be taken from me. I don't really want that, because when you're investing, one of the things that is your friend is time, and you're going to want to hold on to those stocks, hold on to your money for as long a period as you can, and that money is going to grow. And if you're holding on to your money and you're not doing anything, you're actually losing 0.5% here per year. So I personally don't like that. That's something to watch out for, is the annual fee. So I really have a look at the annual fee and make sure it's not too high. If we go back, actually there's a slightly better website I'm going to go onto here. So if best share dealing account, we can actually see a breakdown of the fees from Hargreaves Lansdown. So we'll see here at a glance fees. So you can see that the cost per trade is £11.95. So on exo.co.uk it was £5.95 per trade, and on Hargreaves Lansdown it's £11.95. Now this is something to watch out for as well, because a lot of companies, Hargreaves Lansdown and Interactive Investor being the two biggies, will give you a discount if you buy more shares, because the more you buy, the more money they make. So you can see there's a frequent trader cost here. So if you buy a lot of shares, you're making a lot of trades, the £11.95 actually decreases to £5.95. But this is also bad. It's a discount, so you think it sounds good, but actually it means you're buying more, you're trading more, and you're incurring more fees. So that's actually quite a bad sign. So Hargreaves Lansdown is one of the more expensive ones. They are geared towards higher net worth individuals. So if you do have a couple of £1 million, the fees actually do reduce. There's a sort of staggered sort of system here where it goes down to, if you've got more than £2 million invested in Hargreaves Lansdown, there is no charge on any amount over, no annual charge on any amount over 2 million. So if you've got over 2 million, those charges really do come down. Let's have a look at this website's quite good. It's investingreviews.co.uk. The one thing to of course look at is they will be sponsored, and Etoro looks like they are the ones that have taken on the sort of sponsorship, and they're saying, okay, well, this is the best one. Well, Etoro I've looked at before in the past, and I was wondering kind of what is so good about it, because one of my friends was recommending it. And Etoro comes up as the best option here. It seems quite nice because it says no commission, right? So what happens if you buy a stock, there will be a buy price and a sell price. And that is to allow there to be a market and create sort of liquidity. It means that there's always going to be stocks available, shares available for you to buy. And what this company does is it makes a little bit of money in between the buy and sell price. So that's how they make a little bit of money. And so that'll be a little bit higher. You'll be buying at a slightly higher price than other share dealing accounts, and you'll be selling at a slightly lower price than other share dealing accounts as well. So that's how they make a little bit of money. The thing I don't really like about Etoro is their account is in dollars. So if you're a British investor and you open up an Etoro account, you immediately come up against a conversion fee. And what that means is you're converting, if you put in £1,000, you get a conversion fee to convert your pounds into dollars. So immediately there's fees just for putting money into the account. And I really don't like that either, because you just want as minimum fees as possible. You also have a withdrawal fee. So if you take money out, which you're going to need to do at some point, that's the whole point in investing, is you're investing to make money to eventually take out to live. So if you're paying money to take your money out, it seems a bit counterintuitive to me. There's also an inactivity fee of $10 per month, which is a bit weird, because you want to be holding investments for a long period of time, like I said before in this video. So if you don't do anything, you get penalised for it. That seems very counterintuitive and a bit wrong, really, to be honest. But the biggie is going to be the currency conversion fee. If you're putting in large amounts of money, you're going to be stung pretty heavily, and you might not even know what those charges are. You might not even see it. You'll put in £1,000 into your share dealing account, and up will pop, $1,150 will pop into your account, and maybe you won't actually understand what that fee will be. You won't know how much you're actually being charged. So I think that's quite a dangerous thing to entertain. Next on the list was Finico. I wanted to just have a little look at that, because it seems very good. A very sort of low share dealing price of £2.95 per trade. It seems very accessible, very good. And the one thing to watch out with Finico is there are different fees for different investments. So for bonds, you're paying a little bit more, and there's an annual custody fee of 0.25%. And what is an annual custody fee? Well, it is an annual fee, essentially. You could get rid of the word custody, and it's just an annual fee, like an annual management fee. And you can see here, so this is the Finico website. It's just a small sort of growing company, but that's 0.25%. It doesn't actually, does it say it here? It doesn't really say it here. But the annual 0.25% will just eat into any gains you make. And you want to keep that cost as low as possible. So, for example, right, let's just put it into perspective. On my share dealing account XO, this year in 2022, my annual fee after buying, selling, holding my money in that account for the whole year, my fee was 0.2%. That includes buying and selling. Whereas here, your minimum, absolute minimum, if you did nothing, your minimum fee is 0.25%. And then if you're buying and selling some stocks, your fee's only going to go up above that. So that's something you can aim for, is just the absolute lowest amount of fees possible. What else is on the list? So we've got so many different stockbrokers here. I don't want to go through them all, because lots of them do exactly the same thing. This is quite an important one to watch out for. What I said before was you want to have a stockbroker that has the availability to invest in what you want to invest. So this invest engine only invests in ETFs. You cannot buy individual stocks. Now, you might want the opportunity to buy individual stocks. Personally, I think that buying individual stocks gives you a massive advantage. ETFs, exchange-traded funds, let's take an example. A very popular exchange-traded fund would be the FTSE 100. So if you're buying an ETF of the FTSE 100, you're buying a portion of every single one of those 100 companies. Now, that spreads the risk. If one company does really badly, then you don't really feel it as much, because maybe the other 99 companies do quite well. And vice versa, if one company in the FTSE 100 does really well and the rest do very badly, then you'll do a little bit badly, but not too badly. It'll all even out, and it'll spread your risk. So that means in this invest engine, you can only invest in a broad range of companies. You cannot take positive risks that you want to take. If you spot a company and you think, this company is doing really well, I want to invest in it, well, you can't, not with this broker. So just be careful for that one there. And then there's a whole bunch of other stockbrokers as well. Freetrade seems pretty good. It seems pretty cheap in terms of what it does. Of course, there's an ISA fee of £3 per month, and so depending on how much you've got in your account, it could end up being quite a big percentage. If you've got £1,000 in there, that's £36 a year that is coming off that £1,000. So it might not be worth it. But if you're hoping to invest sort of 20, 40, 60, £100,000 over the space of quite a few years, then that fee is going to reduce and reduce in terms of percentage. It's going to be quite a low fee. So Freetrade does seem on the lower end of things when it comes to fees. And the last two I wanted to talk about, Interactive Investor. I was actually with Interactive Investor before I joined XO, and the reason I left Interactive Investor was because their fees were higher, and it's still the same just now. Some of my family members use Interactive Investor, and the fee is £9.99 a month, so £10 a month or £120 a year. If you're just a new novice investor and you've got just a little bit of money to invest, you just want to minimise your fees, and paying £120 a year to have the account open is just too much. It's just way too much. Whereas you want to be using that money to then invest into stocks and not have to worry about paying these fees. Let's have a look at the fees. I mean, there's sort of £7.99 per month to trade as well. So, the fee doesn't include sort of trades, anything like that. The fee is just to have the account open. And I just don't see a reason for you to have to do that when there's other options out there. But so Interactive Investor, you can invest in American stocks, which of course would also incur a currency conversion. So if you're ever buying foreign stocks, you're going to have a currency conversion. So especially if you're just starting out, you're a novice investor, I would encourage you to really stick with the currency that you use. If you're in the UK, just invest in British companies in pound sterling and don't have any currency fees. If you're a more advanced investor and you've got a bigger portfolio, you might want to spread the risk by investing a large amount into a foreign company which you think is going to do well. And the last one I wanted to have a look at actually isn't on this list. It's Plus 500. Now, Plus 500 is it's sort of more geared up for trading, really, is the only word I can use to describe it. I was going to say gamifying the stock market, and that's kind of what it does. Is you've got an app on your phone, and it's very easy. You just click a button buy, click a button sell. Really encourages you to use leverage. So instead of just putting your own money in, it says you can have 5 times your money or 10 times your money. And so you're like, of course, yes, of course. Of course, everyone's going to want more money than they actually have, right? So you click yes, and then very quickly you can lose a lot of money. So it's something you've got to be super careful of. I would not recommend this at all for novice or advanced investors. I mean, it's just not an investing platform whatsoever. It is a trading company, and you can see this here on their website. It doesn't say investing, it says trading. And I think they do kind of make it quite clear. Start trading. It's about short term, and people like this idea of short term gains. But what I will say is it's not possible. You might get lucky and you might make some money. You are not going to retire from trading. You're going to retire from investing. And that is the long-term view with low fees and very solid companies. So Plus 500, it might be good for a little bit of, fun. It's not going to teach you anything about stocks. So I would completely avoid it. And that's just my honest opinion. But let me know what you think. I mean, if you think if there's any sort of investment sort of stockbrokers that I've missed, please let me know in the comments below. Because it's really useful to sort of get your guys' input and advice and see what you think about this kind of stockbroking industry, because it's absolutely huge. I mean, you can choose from just any companies, and they all have different fees and they all have different services. But do not get confused. Just keep it simple, low fee, and just stick in whatever market you are in and whatever market you feel comfortable with. So hopefully that was useful. It is just super important that I just wanted to tell you, what I use and why. So hopefully that gives you some sort of insight into the stockbroking market. And I guess I will catch you on the next video when we do something equally as interesting, hopefully. So you can catch 2 of my videos here. And hopefully you have a great day. And please do like and share, support me, and I will catch you on the next video. See you soon.